Hey guys, my name is Evan and welcome to Economics 101, your number one source for everything economics. What if I told you the single biggest reason America has stayed economically powerful for decades isn't our military or Wall Street? It's the US dollar. And right now, countries around the world are quietly trying to reduce their dependency on it. In today's video, we're breaking down what reserve currency status actually means, what happens if America loses it, and why this could impact inflation, interest rates, stocks, and your everyday life. Before we jump into the video, I have a quick favor that really helps grow the channel. If you enjoy simplified economics and real-world financial breakdowns, hit the like button and subscribe so more people can find this channel. Now, let's hop into it. So, what is the reserve currency status? What is a reserve currency? I've talked about it a little bit in previous videos, but the US dollar is currently the world's reserve currency. That means countries all over the world hold massive amounts of US dollars in their central banks. They use dollars to trade oil, settle international transactions, buy goods, and store wealth. Right now, nearly 60% of global foreign exchange reserves are still held in US dollars. So that's a pretty significant amount. And this gives the United States a massive advantage, okay? Because the entire world needs dollars. Demand for dollars stays incredibly high. This pretty much means that America can borrow more money cheaply. Okay, Treasury bonds, they stay attractive, interest rates stay lower than they otherwise would, and the U.S. can run longer deficits without immediate collapse. So basically, the world helps finance America. All right, and most people don't realize how important that is. We're going to pivot and move and just talk about a little bit of why the dollar became dominant in the first place. So after World War II, the United States emerged as the strongest economy on earth. All right. America had stable institutions. They had good financial markets, industrial dominance. They had military strength. So these things help it become one of the strongest economies. Then came the Bretton Woods system, which helped establish the dollar as the backbone of global finance. Even after the gold standard ended in 1971, the dollar remained dominant because there really wasn't a strong alternative to the dollar. The euro has structural problems, and China's currency isn't freely trusted globally. And you have Bitcoin, but Bitcoin is far too volatile. So the dollar stays king, but cracks are beginning to show. So why are countries moving away from the dollar? Today's countries like China and Russia and members of the BRICS are openly discussing alternatives to dollar-based trading. The reason why is because relying on the dollar gives the United States geopolitical power. Okay, a lot of geopolitical power. Sanctions become powerful. Global payment systems become leveraged, and countries don't always want to be dependent on U.S. policy. At the same time, America's debt situation is out of control, and it continues to get worse. The U.S. national debt is approaching $40 trillion fast. So that number matters because investors eventually start asking, can America continue borrowing forever? And if confidence weakens, demand for dollar weakens also. That's where the danger begins. So what happens if the U.S. loses the reserve status? The first thing that will happen, more than likely, is your borrowing costs are going to likely rise. Think about it like this. If fewer countries buy U.S. Treasury bonds, the government has to offer higher interest rates to attract buyers. Okay? Those higher interest rates are going to impact everything from mortgage rates to your credit card, to business loans. Business loans become more expensive. Federal debt payments explode. The second thing that is going to happen is inflation is going to surge out of control. America imports huge amounts of goods. All right, so think about it like this. If the dollar weakens globally, that means what we import becomes more expensive. That means higher prices on pretty much everything. Think about it, your iPhone, electronics, cars, energy, what we're dealing with right now, food, pretty much all consumer goods. Your purchasing power declines. I've talked about inflation in previous videos. I have a lot more coming about inflation, but your purchasing power declines and living standards can fall over a course of time. Now, the third thing would happen is markets could become more unstable or more volatile than they are right now. The dollar currently acts like the world's safety asset. If confidence weakens, global investors may diversify in other areas. That would create higher volatility, lower stock valuations, slower economic growth. And remember, reserve currency status isn't something that just disappears overnight. It erodes gradually, okay? But even gradual decline can reshape economies over decades. All right. Real quick pause. If you want more breakdowns like this on inflation, debt, the Federal Reserve, and global economics, please make sure to subscribe and turn on notifications. It really helps the channel grow and keeps everyone ahead of what's happening financially. So could another currency replace the dollar? Realistically, okay? That's the question that gets asked a lot. Which currency is going to replace the dollar? And it honestly is not that easy, all right? So the dollar still dominates because global investors trust U.S. financial markets more than most alternatives. America still has massive capital markets. They have we got a strong legal system, deep liquidity, military and geopolitical influence. So these things, so even if the dollar weakens, they may not be able to clearly replace it. Okay. Instead, the future may look more segmented or more fragmented, I guess. Maybe more trade in local currencies. You're probably going to see more trade in local currencies, more gold purchases by central banks, regional financial systems, digital currencies gaining influence, things like that. The world may slowly diversify away from the total dollar dependency rather than just fully replacing it. I don't know. In my opinion, I don't see us replacing the dollar. Okay, but even partial decline does matter because America has benefited enormously from the system, from this system for decades. So the big takeaway on everything, at the end of the day, the reserve currency status isn't just an economic topic. It affects pretty much everything, from inflation to jobs to interest rates to your savings to the housing markets and America's long-term economic power. So the dollar is still dominant today, but the global financial system is changing. It's changing very fast. So a lot faster than people realize. So if you found this breakdown valuable, make sure that you please hit the like button, subscribe to the channel, and comment below. Do you think the dollar will still dominate 20 years from now? This is Economics 101, your number one source in everything economics. Thank you.